Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 strong buy top analyst stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks that all come in with a strong buy consensus and have recent ratings from some top ranked analysts. And as a bonus, all 3 stocks today also pay a dividend. We're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We came across these stocks today using the top analyst stock page. Found under the Ideas tab, we headed over to Top Analyst Stocks. This is going to show us a list of stocks with a strong buy or strong sell rating consensus according to the best performing analysts. We set it to look for strong buy companies, and that gave us our list here down below. You can check out those top analyst stocks over on the TipRanks website or also on the TipRanks mobile app, which you can download using the links in the description down below. Of course, if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our 3 top analyst strong buy stocks. First up, we're taking a look at a company called Sealed Air. They trade under the ticker SEE, currently priced just above $37 per share. Now, they did drop off last summer, so overall in the past year are down nearly 5%, but have been climbing back recently, gaining over 4% in the last 3 months. Sealed Air is in the business of packaging solutions and is actually the name behind bubble wrap. Starting back in 1957, the creators set out to make a new wallpaper with air bubbles in between, and while this never caught on for decorating, it did become the well-known bubble wrap that we know today, and was their signature brand for the company. Of course, since then, they have grown and innovated beyond packaging materials to become a company offering solutions and services to a variety of industries. Whether it's protecting products, preserving food, or providing healthcare solutions, their products and services have made them a leader in protecting everything important to you. They have been consistently paying a dividend since about 2006 and steadily growing it over that time as well. Their current quarterly dividend comes in at 20 cents per share for a yield of 2.19% and a healthy payout ratio below 25%. They shared their first quarter earnings report back at the start of May, and they did come out with a notable earnings beat. Q1 revenue of $1.33 billion did outpace the expectations, while earnings per share of 78 cents came in well ahead of the 53 cents anticipated. Looking at their net sales, it was down 1% year over year, but their net earnings grew 33%. They said that their first quarter results were ahead of their expectations, reflecting stronger than expected demand within food and continued volume stabilization. Just yesterday, we had a 5-star analyst from Jefferies assign a buy rating on the Sealed Air stock. This followed the appointment of a new CEO for Sealed Air. The analyst noted that the appointment of Patrick Kivits is a pivotal move, with his proven track record in the packaging industry being a significant positive. He also said that this reflects the company's commitment to innovation in fiber packaging alternatives, positioning them to capitalize on the increasing demand for sustainable packaging solutions. With 9 current analyst ratings, Sealed Air does come in as a strong buy with 8 buy ratings and just 1 hold. And the average price target comes in at $43.78, implying an upside potential of nearly 18% from current prices. Looking at our most recent ratings down below, here we have a 5-star analyst at Jefferies with an upside of about 27%. Our low-end price target is a hold here with a downside of 5%, and our high-end price target comes from Mizuho with an upside of 35%. Our second top analyst stock is Silicon Motion. They trade under the ticker SIMO, currently priced at $84.48 per share. In the past year, their stock has climbed 29%, climbing 14% in the last 3 months. Silicon Motion is a global leader in supplying NAND flash controllers for solid-state storage devices. The semiconductor company develops NAND flash controllers for these SSDs and other devices. Their products are used in a variety of applications, including smartphones, PCs, data centers, and industrial and automotive applications. They shared their first quarter earnings report near the start of May. While they did have a notable earnings beat, they did see sales decrease quarter over quarter, while they increased year over year. For their first quarter, they reported earnings per share of 64 cents, beating estimates by 8 cents per share. Looking at their net sales, they did decrease 6% quarter over quarter to $189.3 million, but this did increase 53% year over year. Management said that business continued to improve as demand was stronger than expected, and that their SSD revenue increased again for the 4th consecutive quarter as end market demand stabilized and programs with their flash maker customers continued to scale. A 5-star analyst from Roth weighed in on the stock following investor meetings a few weeks ago. They discussed the company's growth and margin recovery potential following recent supply chain normalization. The firm believes that the company's product portfolio is well positioned across client SSD, smartphone, and enterprise hyperscale SSD opportunities. With 8 current analyst ratings, the Silicon Motion stock does come in as a unanimous strong buy. And the average price target comes in at $91.75 for an upside of over 8% from current prices. Looking at our list down below, we have a couple 5-star analysts weighing in recently, one of them being our high-end price target from B. Riley Financial with an upside of over 24%. And our low-end price target comes here back in May with a pretty flat price target and an upside of 0.6%. And last but not least today, we're taking a look at Reinsurance Group. They trade under the ticker RGA and are priced at $205 per share after climbing 45% in the past year. Over the last 3 months, they're up over 12%. The Reinsurance Group is a global provider of life and health reinsurance solutions. Founded back in 1973, they now have a global presence in more than 100 countries, and they focus on traditional and non-traditional life and health reinsurance products. Their services help clients manage risk and optimize capital. They do this by sharing risk on individual and group policies in exchange for premiums. Their products and services include life and living benefit reinsurance, group, health, and financial solutions. They've been paying out a quarterly dividend for the last 30 years. With a current quarterly dividend of 85 cents per share for a yield of 1.68% and a payout ratio of about 16%. They've been consistently growing that dividend for a while as well. Reinsurance Group also shared their last quarterly report on May 2nd, and they came out with a massive earnings beat. They reported Q1 revenue of $6.38 billion, which was well ahead of analyst expectations, and earnings per share of $6.02 blew out the earnings estimates of $4.54. The company saw their net premiums total $5.4 billion, which was an increase of nearly 59% over the last year's quarter. Just a few days ago, a 5-star analyst from Wells Fargo weighed in on the stock. They said their buy rating was based on a robust outlook presented by the company during their investor day, where management indicated confidence in achieving the higher end of their ROE targets, and they said this optimism was grounded in several growth avenues. They perceived the company's guidance to be conservative, noting favorable mortality trends, a promising asset-intensive deal pipeline, and an increase in exclusive business with higher ROEs. The RGA stock has 10 current analyst ratings, coming in as a strong buy with 8 buy ratings and 2 holds. And the average price target of $223 would imply an upside potential of 8.72% from current prices. We have a handful of 5-star analysts weighing in on the stock here within the recent weeks. On the low end, we do have one of our hold ratings with a downside of 5%, and a high-end price target is our most recent rating here from Jefferies with an upside of over 16%. So that is a look at 3 strong buy stocks, all with recent buy ratings from some 5-star analysts. Let me know your thoughts on these companies in the comments down below, and if they were on your radar before. I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.